And then I'd imagine go into the miners, because they've sort of been extremely unloved over the past few years, and many people link that to international central banks buying precious metals, but Western investors selling precious metals and the miners. So I think that's what a lot of people
join in, and that'll be a gush, when they suddenly say, "Oh my God, I missed it," But already some major asset managers, and Stanley Druckenmiller back in February, for example, I cite him all the time because he was probably the first. He dumped a bunch of very big name tech stocks and bought Newmont. Well, I mean, how well did he do? Well, it's trading right now, Newmont, at about $54. Okay. Been there for 3 months. It's a level that when you go through, it's going to gush again. It was at 31 back in mid-February. So he's done pretty good on Newmont, and yet it hasn't made headlines. But that's a heck of a percent move. And it's only getting started by our technical metrics. It's the big blue, largest gold miner in the world. So naturally, large asset managers, they don't tend to go for the juniors and stuff like that. It's the risk assets. They go to the blue chips. But once they get into it, and maybe silver gushing through 50 will wake some of them up. They'll go start that. You'll watch those junior miners. They'll start to go ape on the upside, percent-wise. Get gobbled up by the major miners. I think you've got to focus mainly on the medium to large gold and silver miners. And with an emphasis somewhat on the silver miners. They're doing better on a percent basis right now over the last several months, especially than the gold miners. But once you build a little bit of fever, especially in the western part of the world, into perception that gold's good, a good place to be, and you'll start seeing the junior miners go up a lot more percent-wise. I don't know how much more, but a lot more. And when you look at the overall category of gold miners, like the XAU index versus the S&P, or XAU index versus gold, and go back decades and look at where it is right now in terms of valuation. It's dead quiet. It's basing. It's not going down. In fact, it's the spread relationship between XAU, the gold miners, Philadelphia Gold and Silver Miners Index, is well off its 2015 low. In fact, it's more off of its bear low than gold is. So it's actually gained more than gold over the last since 2015 low. People don't recognize that. But if you look at the spread, you'll see it actually did. But it's still kind of boring, and it's still very, very cheap historically. And it's got technical dynamics that we can see on that spread relationship between the miners in gold and the miners and the U.S. stock market that says when you turn up, you could gush.